This is your LMAX Exchange technical update for Monday, July 31st, 2017. Euro dollar. So last week the euro broke up to a fresh 2017 high, also clearing critical resistance, that range resistance from the 2015 high around 117.15. This suggests that the market could be now putting in a longer term base and opens the door for medium to longer term upside over the coming weeks and months. Still, daily studies are technically overbought, and so there is risk still for a short-term correction before the market even considers a resumption of gains and this fresh breakout. But we would need to see a break back below the previous weekly low in the euro, which now comes in at 116.13, to strengthen the possibility for a short-term correction and open the door for some declines for that market to search for that next higher low. So overall, a bullish breakout, medium to longer term potential upside, but still short-term technical studies are overextended, warning of the need for a short-term corrective pullback in the euro. Sterling dollar. So cable is broken up to fresh 2017 highs in the previous week. The market is now highly constructive following the breakout that we saw in April above the previous range resistance at 127.75. Here though, with this market, anytime it's been making gains following that breakout, they haven't really been able to extend too much, which suggests that we could still see some correction and consolidation before the market is really ready to make that next big push towards a measured move extension at 135. If we see a break back below recent support, which comes in around 130.50, that would strengthen this outlook and could open the door for an acceleration of declines back down towards the 128 area. Ultimately, setbacks should be very well supported ahead of 127, with only a break back below 125.89, that low that we had seen back on the 21st of June, to delay or compromise this constructive outlook. Dollar yen. So dollar yen continues to adhere to a range over the past several weeks, and this latest topside failure above 114 again has set up a resumption of declines back down towards the range low, which comes in around the 2017 low just ahead of 108. For this market to see any shift, we will need to see a break back below that 2017 low at around 108.10, or a push back above the range high, recently a high that comes in at 114.50. Euro Swiss. So Euro Swiss has been a big mover of late, with the market exploding to the top side in the previous week, easily accelerating through 112. That was the highest level that the market had seen since that January 2015 collapse in Euro Swiss. And so the push now opens the door for fresh upside over the coming weeks and months. There isn't a lot of resistance following that collapse that we saw in January of 2015 below 120. And so between 112 and 120, the market doesn't have a lot of resistance. However, daily studies here are now exceptionally overextended, which does suggest either we see a consolidation over the coming sessions or we see a pullback before the market considers a fresh upside or meaningful fresh upside. Look for any setbacks to be now supported by this previous resistance turn support at 112. Aussie dollar. So Aussie saw a big breakout the other week, with the market taking out some key resistance at 78 and then at 80, that psychological barrier, which sets the stage or suggests that the market could be putting in a longer term base. The next key resistance for this market comes in by that May of 2015 high around 81.60, but daily studies here following the breakout are extended, and so we could still see a short-term corrective pullback before the market considers establishing a fresh upside or looking to extend this breakout. But a break back below key support now at 78 about would be required to confirm or strengthen the possibility for the onset of a necessary correction and open the door for that weakness for that market to look for potentially a higher low and bullish continuation. Dollar CAD. So dollar CAD took out some major support last week, breaking below the 2016 base, which had been in place around 2460. The market had accelerated down towards 2400, but has yet to been able to break below that barrier. That's a new 2017 low, of course, at 2414 from last week. but daily studies here are highly extended. We have seen about a 10% drop since the market put in a high, 2017 high in May at 137.94. And so again, on a short-term basis, there is risk that this market looks to bounce and put in a necessary correction that could eventually lead towards a medium to longer term bullish resumption. But right now, key resistance for this market comes in on a short-term basis by the previous weekly high at 125.76, 125.77, but a break back above 127 would really be required to get the market pushing back to the top side and alleviate this downside pressure. Kiwi dollar. So the New Zealand dollar pushed up to a fresh 2-year high of its own last week and also extending up above a psychological barrier at 75. This suggests that this market could be putting in a more significant base, but just like with Aussie dollar, this is an extended market on the daily basis, and so we could see a short-term correction that opens the door for downside in the days ahead to allow for these extended studies to unwind. We would need to see a break back below 7,400 here to strengthen that outlook. Of course, again, the breakout above 75 does suggest the possibility that we are seeing a meaningful bullish structural shift, and so that could be the case going forward. But again, with extended short-term technical studies, there could be first a bit of a pullback before we see any extension of gains. SPX 500. The S&P 500 broke up to another record high the other week, with the market trading up to a key extension this time at 2480. This does suggest that the market could now finally see some form of a legitimate pullback, but ultimately we need to see a break back below 2400 for the market to suggest that it's putting in some form of a top. Until then, the upside pressure remains firmly intact, and the bull uptrend could open the door for fresh record highs. Gold. So gold continues to push higher following that recent drop that we saw down to, but not below 1200, with the market being supported ahead of 1200. This is a market that has been very well supported on dips over the past several months, with the overall structure quite constructive as it's been supported on dips and has been making gradual higher highs. The next high that comes into focus is the 2017 high at 1296. A break above that level would expose the 2016 peak at 1375 further up. Only back below 1200 in gold would compromise the constructive outlook for this market.